Well, here we go. Anyway, thanks everybody. Appreciate you all being here today. It's great seeing familiar faces and familiar names that have joined us throughout this entire course, if you will. So, thank you all for making time on your calendar for us, and for us to be able to be here with you today. As always, this would not be possible without our sponsors of the Arkansas Economic Development Commission and Arkansas Manufacturing Solutions. So, thank you both as well. Rudy, I'm going to go ahead and kick it off to you. They don't want to hear me talk.
Well, thank you much, Miss. Okay, so I don't know that you covered this one, but the District Export Council is obviously in every state, and we are part of the Arkansas District Export Council. And the reason that we exist is to strengthen individual companies and stimulate the U.S. economic growth, and most importantly, to create jobs. Okay. So I'm Rudy Ortiz, and I'm with Strategic Business Services. I'm the one of the business consultants here, and I am also the chair of the District Export Council's Education Committee. And so it's my pleasure to put these sessions together to be able to provide the kind of know-how that you guys need. And I think we're going to have a really good session today. And if Miss Heidi, if we can go to the other slide. Yes, thank you so much. And so for those of you who have been in on the last few sessions, this particular series, it's a 6-part series called Grow Your Exports. And we took you from, figuring out what you need to know to get ready to export, developing customer relationships, building global infrastructures. And last week we handled international logistics. And today we're going to be talking about managing international payments and financing. And we were talking just a little while ago, and that is that until you get paid, it's just a gift that you've made to some other country. And so making arrangements to get paid and handling the risk mitigation part of this is really, really critically important. And so we're going to have Miss Melissa Luster today talk to us about that. And next week we're going to have trade regulations and legal issues pertaining to contracts as well. So Melissa is a trade specialist at the BOK Financial, and she started her career almost 17 years ago now. And she's been with them for quite a bit of time. And she it says in 2023, she reestablished BOKF's delegated lending authority with XM Bank, and we'll talk about that as well. And she's a member of the Bankers Association of Finance for Finance and Trade, and she's the committee chair in Trade Workshop Planning Committee, and she's on the board of Make-A-Wish, and she enjoys golfing, hiking, camping, fishing, and traveling. As a matter of fact, she just very recently was in Mexico, and I think she enjoyed her time there. And so, Melissa, with that, if you will go ahead and share your screen and start the presentation, I would appreciate that.
Absolutely. And I was just going to let you guys know that due to my internet connection, I'm traveling. I'm not sharing my video. So you'll just see slides. So let me get this going real quick. Here we go. Sorry about my very messy background. Let me just make these bigger. Now I've got a random toolbar up there. Sorry about that. Okay, here we go. And let me get this into a better mode so you don't see my side. There we go. Okay.
Excellent.
Perfect. Okay, so we'll start with the benefits. Well, here's a quick overview. And thank you for the introduction, Rudy and team. It's always great to work with you all, and I am very open to interactive sessions. So if at any point anyone has a question and wants to jump in, I'm happy for you to do so. Because if you're like me, I know that sometimes I try to remember my question and save it for the end, and that doesn't always work out. So I want this to be beneficial for you all. And so just jump in with any questions.
Very good.
So
And
we're going to cover.
yeah, we also have the chat that people can type in their questions if they wish.
Excellent. Thank you. So we're going to cover benefits, types, payment methods, and risks and barriers to trade finance. And I just gave you a quick little explanation of what trade is. So I won't read that out loud, but let's begin. So the benefits of trade finance, it's going to be able to help you grow your business. It can help inject cash flow into your business for startup. It's used by everyone in the trade industry, pretty much, from governments to large corporates to startup companies and everybody in between. The nice part about trade finance instruments is, especially with a financial institution, they build in the risk mitigations and to make sure that you are able to transact your business safely and to avoid any type of issues that you might have along the way. And like I said, or like Rudy read in the introduction, we also work with governments such as XM's program, which they have a really nice working capital program that if you can meet their criteria, which they definitely work with you, they offer a guarantee to help you if you're having to issue bid bonds, or perhaps you are asked to put up, a lot of times in contracts, we see warranty bonds asked for, or performance bonds. So it's hard to come up with that cash sometimes, and that's a good way to get your cash to get those put in place. Next, we have the types of trade finance. So we'll start with cash in advance, and that is exactly what it sounds like. It is basically just the payment of funds. This is typically unsecured, and so it's got a little bit more risk to it. And then you have term loans, which are a little bit more traditional, where you've got a more secured, collateralized type of loan. Trade credits, which once again, they're very similar to what their name sounds like. They are trade-based credits where you are able to work on a basis back and forth with your trading partners. And then receivables discounting, where you can actually borrow against your receivables inventory and get paid sooner than if you sell on terms like 30, 60, 90 days. Often, you can just ask for a discounted payment of your receivables that you have. And then at the term, everything gets pushed through and made whole. So if you are working with an institution and they agree to, if you're selling on terms because your buyer needs terms, you can ask your lender to pay you, say, 95% maybe of the invoices outstanding, and you get your money now so you can go buy more of your raw materials that you need to make more products. And then at the end of the term, the bank is made whole. Purchase order financing, it goes along with invoice financing, and it is also a lot along the same lines of what it's named after, where you can submit your invoices to your financial institution and they will finance against that. Typically an advance rate is about 80%. And then you have other types of financing, which can be like equity financing, where you have like venture capitalists or crowdfunding, those type of resources available, or to come up with collateral and equity for your exports. So next we'll move on to our payment methods. There's cash in advance, which that is obviously the most efficient and the most preferred by most exporters. This is a little bit tricky sometimes whenever you are working with a new buyer. It's sometimes hard for them to release the funds and expect for you to just go ahead and ship, just like you said you're going to do. And that was, I know, discussed in one of your previous sessions, where it's so important to know who you're doing business with for that reason. Is, you know, that's where a lot of people hope to be in their exports and in their trading partners. However, it's not always easy to start out there because that takes a lot of trust. A lot of times, we encourage our exporters to definitely have a local presence. Like there's agents available, and that's also beneficial because they get paid a percentage of the work that they can bring to you. So it all ties in together. It's all part of the working cog, is to have your agents and to have know your customers and know who you're doing business with.
I guess, Melissa, a part of the issue here is that, you know, on one hand, if I'm the seller of the good, you know, I want my money and I don't want to risk it, and so I ask for cash in advance. But on the other hand, the person who's buying the stuff, you know, he doesn't know if you're going to perform or not, and so he's risking that the fact that he's going to send his cash and that he may or may not get what he thinks he's going to get. And so it's a matter of either developing the relationship or having these instruments in place to try to kind of meet a happy medium, isn't it?
Right, exactly. And that was exactly, you know, going back to the point that was touched on in the previous, I think it was 2 sessions ago, maybe. You know, it is so important to have those face to face and know who your buyers are and whatnot. And so that all factors in. And then, so your next step in that is a letter of credit, which is another good tool. And we see that used most frequently. And the nice part about, if you do end up shipping and doing your sale under a letter of credit, the first thing it's going to let you know is that your buyer is credit worthy, because it's going to take collateral for them to go to their bank to open up a letter of credit in your favor. So that right there tells you, A, they are credit worthy because a bank is going to extend credit to them. And B, it gives you a little more security because your letter of credit is going to be, I usually refer to it as a little mini contract. If you haven't ever done a sale on a letter of credit, it's nice because it details out what documentation will be needed. If you're going to ship via air or via ocean, and this, I'm just going to bring back all your speakers kind of into this, Rudy, but this goes back to your logistics that you had last week. It's so important to work with a good freight forwarder that knows you, knows your business, and knows how to get those goods out. It's even more beneficial if they are familiar with letters of credit, because they often, in your letter of credit, it's going to detail certain information that's going to be required on, say, the insurance or the bill of lading or the airway bill. So it's always really beneficial to have a freight forwarder who is familiar. And she did speak about like the trade term that it is used a lot of times, which are another term for those are Incoterms. And that is where the risk of the goods and possession pass. So if somebody in your shop shows up and says, hey, I've made this sale under a letter of credit and it's X Works, that means that your buyer is basically responsible for picking up those goods at your warehouse or wherever you agree to and clearing them for export and clearing them for import versus, and that's usually the most least expensive way, versus if you're going to go full swing to the other side of the spectrum where you have like deliver duty paid, which that means that you're going to incur a lot more expenses, such as clearing for export, clearing for import, delivering them actually to whatever location is listed in that letter of credit that you have to deliver to. The nice part about letters of credit is it gives you a little bit of leverage, because along with letters of credit comes discrepancies, which can delay your payment a bit. If you are not familiar with your buyer, if you are, you can get reassurance that a discrepant presentation will, be accepted anyway and be paid upon. So, and in order to receive the documents, like the invoice, the packing list, the bill of lading, which is the title to the documents, if there are discrepancies, in order for the bank that issued the letter of credit in your favor to pay you, the discrepancies have to be waived. So it's an exchange of your buyer would waive discrepancies, and then in turn, they would get the documents needed to clear the goods and receive them. So there's a plus and a minus to letters of credit. They're used still very much as a payment mechanism all around the world. And depending on where you're doing business, a lot of times they are somewhat required, especially if you do business in India or Pakistan, Egypt, Turkey, because they have the banks that are required to control the US dollar flows. And if you're getting paid in US dollars, those central banks are going to force the importers to sell their or buy their goods on a letter of credit. There was a lot of information there. Does anybody have any questions on letters of credit as a payment method? No? Yes? Do we have one question maybe? Okay.
Melissa, this is Rudy. Well, I don't have a question, just kind of a comment, and that is, if you go like DDP, like the other extreme where the seller is basically responsible for just about everything, it's not like the person who's the seller is going to eat anything. He or she's not going to like lose money as a consequence of that. As a matter of fact, you could actually charge even more because you're putting in the effort and the risk and all of that, and actually wind up making even more money. But it is more work on your part. But I just wanted to make sure that everyone was clear that in you taking these responsibilities and these additional expenses, it's not like you eat those expenses. Those are going to go right on top of the other cost that you're going to charge the buyer, and maybe even a surcharge for having done so.
Right. If you've priced for that in your original contract, that's the real driver I'm trying to make, that before, you know, if you are signing off on contracts for these, or you have a salesperson signing off on contracts, please just remember to look and see how you are selecting your trade term. Because if you price for X works and then you receive a letter of credit that has DDP, that's going to eat into your margin, in which you can ask to amend the letter of credit, of course, but that's going to be initiated on your buyer's side. So the real point I'm trying to make is DDP is absolutely a perfect Incoterm or trade term to select, as long as you price for it.
Yep.
So that is where I was really going. And thanks for clarifying that, Rudy. Perfect. That was good. And then the next payment method that we have is the documentary collections, which is very similar to a letter of credit, except for you don't have the letter of credit to adhere to. So you don't have a latest shipping date. You don't have an expiry date. This is just the bank acting as a middleman between you and your customer. So back to the top, if we say, okay, I'm a tennis racket manufacturer and somebody in Pakistan wants to buy a few cases of my rackets, you know, we might start off and do 6 months worth of letters of credit, and everything is going, you know, swimmingly. Everything is getting shipped. I'm getting paid, no issues. And then after 6 months, or maybe a year, 2 years, however you feel comfortable, then you could maybe move to documentary collections, and the bank is just passing the documents back and forth for you. And same thing, that your customer, unless you're offering terms, will have to remit the payment before they get those collection documents in order to receive the goods and clear the goods. So that's another thing that you can use as a tool, and to let the banks act as an intermediary for you. And then once everything goes great and my business is booming and everybody's using my tennis rackets in Pakistan, you know, I might consider going to open account with my buyer, where I can just ship and invoice and everything is fantastic. No late pays, no hangups. Everything is going well. And then finally you have a consignment, which we all know what consignment is basically, you know, you're releasing the goods and then they will pay as they're sold. So, okay. Do you want me to read those chats, Rudy, or do you want to read them out to me, and that way we can keep going through the deck? How do you prefer that?
No, just go ahead and go on.
Okay. So here's a little graphic to help everybody kind of have a visual as what is going to be the most beneficial to the exporter and what's most beneficial to your buyer. And you can see what is most secure and least secure. So little something to keep as a visual aid. Okay, next we have the risks involved. So obviously we have product risk. Is your product something that is perishable? Is it something that, you know, is it seasonable? You need to make sure that you are aware and do all your homework and due diligence on that. Manufacturing, is this something that you have been asked to make per spec? And if something were to go wrong, would you be able to resell it or disassemble it and resell it? All things that you need to make sure that you think about, along with transport risk. I mean, I'm sure that most of you have heard today there's so much going on in the Red Sea that people are having to route their shipments. Well, if you're selling to Europe, they're having to route them alternative ways, and that's taking a little bit more time. So that's something that you need to be aware of. If you've got a contract that says you're supposed to ship goods or be delivered in a certain time, make sure you get back to your freight forwarder to ensure that you are able to book your sailings and meet all of that criteria. And then next we have currency risk. Are you selling in a foreign currency? Is it a currency that is volatile? Is it one of the main currencies? If it is one of the main currencies that are used in trade, then would it make sense to perhaps hedge? And which means that you or do a forward, which means that, if in 30, 60, 90 days or whenever you're supposed to receive X amount of dollars for an invoice that you have generated in a foreign currency, you can go ahead and lock in a forward rate for that invoice. And that way you know what your exchange is going to be. And if you are doing that or considering doing that, I would definitely encourage everybody to reach out to their financial institution that you prefer and price that out to make sure that you are getting the best exchange for your invoicing. And if you're not doing that, it's something that I would definitely say that you should take into consideration as a suggestion, because you could be, bringing home more to your bottom line if you're able to invoice in a foreign currency where you wouldn't be subject to exchange. I've seen several contracts where they offer the invoice to be in the currency of the buyer or the seller. So that's a great conversation to have with your financial institution to make sure that you are getting as much as you can for your dollars. And then lastly, the geopolitical risk, which that goes back to the Red Sea and the turmoil across the ocean from us. Hopefully no one that is exporting right now is having any issues, because there are definitely sanctions and anti-boycott to consider, and all the different regulations that are put in by our government due to these geopolitical incidents or events that are happening around the globe.
And
Okay.
Melissa, I want to go back just for a second, going back to currency risk. One of a lot of times I get asked by people that are somewhat new to exporting and importing. Well, so why would I do that? Why would I go ahead and do this in pesos or shekels or whatever the foreign currency is? Why would I do that? And I guess the reason, I think the best reason for it is, let's say, for instance, that your competition is only willing to do cash in advance. Okay.
Right.
Well, that limits the number of potential clients, because a lot of people aren't willing to do that. They're not willing to take that risk on the buyer's side. And so, if you're willing to do a letter of credit, well, it balances out the risk a little bit more. And in addition to that, if you're willing to sell based on the currency of the buyer, that's another advantage that you have against your competition, because a lot of companies are not willing to do that. And the way that you mitigate your risk is just exactly what you said. You have a forward contract that is going to lock in the currency so that you know that you're not going to get less than X, whatever the contract is for, and at the same time it provides you a not only a hedge, but it also provides you an advantage against your competition who is unwilling to do that. So these are all selling tactics and ways to mitigate that risk.
Exactly, because that's what it's all about. I mean, in today's day and time with so much technology, you have to always be doing your due diligence. That's another reason why I know that there's fintechs that are doing a lot of this as well. And I know, there's all types of different resources that you can find. If you work with a financial institution, it just, that risk mitigation is built in. It's built into, the currency risk. If you utilize the resources that are available, it just helps you. Your bank is always going to be on the lookout. They're always going to be, screening things through OFAC, which is the Office of Foreign Asset Control. Because if you find yourself doing business with someone, it's a terrible thing to see. And luckily we don't and haven't seen that. I'm going to knock on wood in my tenure at the bank. But if you do end up doing business with someone and everything has gone amazing, and then it comes down to your payment and something happens and somebody on your payment hits an OFAC flag, then it's possible that your money can be frozen until basically the Office of Foreign Asset Controls decides that the freeze on the funds can be removed because they have done all their investigation. So that is definitely not meant to be a message of fear. Doing business cross borders, I encourage it. Doing trade business and doing them through letters of credit are one of the least risky ways. There's so much less fraud in trade transactions like letters of credit and documentary collections versus open account, because you do have those other layers protecting you. So it's just very important to know who you're doing business with, know what your risks are. Definitely make yourself more competitive if you can invoice in the foreign currency. I suggest you do it. I suggest you also make sure that, like Rudy and I have said, that you have done your due diligence and your homework to make sure that everything is going to end up the way that you design it to, so you can continue to grow your company. Okay, any more conversation around risk? All right. I just have can I just ask a quick question to this group? Is anybody invoicing in foreign currency right now? And you can just come off mute if you want and say so. I just was interested to hear what experiences, if anybody had invoicing in foreign currency. And if you'd rather have that conversation offline, you have my contact information. But it is a really beneficial tool to make yourself, especially if you are just starting out, to make yourself more competitive. Okay, so just a quick data slide. Here's what Arkansas looks like as of the end of 2023. Aircraft is your #1 export, and then rice, which I don't know why I thought that it was more agriculture or more livestock until I looked at this. I actually came across a gentleman who is a rice exporter out of Arkansas. My son is in the process of buying a home in Tulsa, And the gentleman that he is buying it from is a massive rice exporter. So there are lots of programs available through the government as well for financing on agricultural products. We are not a part of that program, but it's called GS 102. And that's another extension of the US government to inject money into helping agricultural exporters get their goods. And a lot of times with that program, the US government has select banks in emerging markets that they partner with. And so that will mitigate the risk if you are looking to go into a new market and you are doing ag goods. That's a great program to look into as well, especially since you've got rice and cotton and eggs as, your top 3 out of 5.
In addition to the assistance that you were highlighting just a second ago, Melissa, the USDA has all sorts of programs to help with those kind of commodities, to be able to sell them overseas. It even has marketing assistance programs. So there's a lot of help to U.S. companies who are doing agricultural sorts of stuff.
Right, exactly. And they can, offer resources that you weren't even aware that you had available. So they can help connect you with buyers. So just another good note to file away. So what does the export financing application process look like? I just thought this might be helpful because I know that there's a lot of times I have worked with exporters that, like I said, it's all of a sudden this letter of credit or something shows up on their desk. They weren't aware what the sale, that the sale was made a certain way. And so this will help you if you do end up decide to ask or apply for some financing. More than likely, whoever you work with is going to want to see some financial statements to just see what, a placemat snapshot of what your company looks like on the books. And then you might want to go ahead and prepare a list of any assets, because asset-based lending is another really popular type of financing these days. So that would be good to go ahead and compile your list of assets that you could use as collateral. Any type of forecasts, any kind of orders that that you have in the pipeline, or any target countries that you are looking to penetrate into with your exports. That's always good because that is going to show your lender or whoever's going to finance your exports that, you are on top of your sales, where you're going, where you've been, and all that pertains to that. Along with your liabilities. Who do you owe? What, are there barriers? Is there any type of barrier to getting the raw material that you need for your exports? All good things to go ahead and have together to be able to talk to your financial institution about, and along with your trade cycles. And that kind of goes back to what I talked about in the beginning. Is your product seasonal? Or does it only, is it cyclical based on other trends in the market? These are all things that the more you can talk to these different points, the more the lender is going to have confidence that while you may be a startup, you definitely have your information together and you're organized and on top of things. So then what you can expect is, they're going to basically look through your financials. They're going to see what business sector you are, because different sectors of business are graded differently, traditional versus non-traditional sectors. And that all depends too upon where the current state of economy is. A lot of times, sometimes it's right now we're in a very tough stage because interest rates and inflation have been a little more volatile than we have seen. Even in the pandemic, they weren't as volatile as they are right now, as everyone or as the governments are trying to make corrections and make sure that the interest rate is still allowing for growth. But as far as the process goes, once you turn in all of the information that we went over on the previous slide, then it's a little bit of a waiting game to see, if they have all the information and they feel confident to lend against your products. If they need more information, perhaps, who's on your board of directors, who's your, managing directors. Are you going to have to pledge a promissory note as the owner of the business? What countries are you doing business with? I mean, if you're been negotiating a contract in Israel, that could be a little bit tricky right now. So versus, then there's also lots of programs for Africa as an emerging, business partner. I know the US government is really doing tons of promotion. And even though that is a risky sector, the fact that they are focusing and trying to build growth, that could be a great opportunity as a new exporter to get into that emerging market at the ground floor and establish yourself. So lots of different things to consider. So that is about all I had to talk about.
Well,
I'm happy to go over questions.
I tell you what, I'd like to just cover very briefly, kind of read something about, and you mentioned XM, which is the Export-Import Bank of the U.S. It's obviously a part of the federal government, and it's just a wonderful tool also in terms of risk mitigation. I'm actually going to read what it says about XM. XM's export credit insurance provides your business with the confidence necessary to enter new markets, gain new customers, and boost sales. This simple tool has significant benefits, such as it limits your non-payment risk for many commercial and political reasons. It covers up to 95% of your sales invoice. You can protect export sales to a single buyer or multiple buyers. It allows you to extend credit to your qualified foreign buyers. It can improve cash flow of your customers by replacing methods such as cash in advance and letters of credit. It provides you with access to financing. As XM's insurance also enhances the quality of your firm's balance sheet. It says your foreign receivables become insured by the U.S. government, allowing your company to borrow against these receivables. Ladies and gentlemen, what we're trying to highlight here, and what Melissa has been doing is ways that you can finance your exports and some of the financial tools that you can use. And XM is something that you shouldn't overlook if other kinds of protection is not available. XM is a great tool. In many cases, there is private insurance, but they only want to do deals that are kind of on the larger size, and that's where XM comes in. It'll do anything from a couple of $1,000s to several millions of dollars. So in terms of risk mitigation, do look at XM as well.
Exactly. And they will work with you. Because they do have a pretty extensive checklist. However, if you don't perhaps maybe meet one thing, they have all kinds of waivers and ways to work around that. And the best part about it is that they will go to bat for you. I mean, they will go and work out if you have a customer that doesn't pay or is slow pay. They will reach out to your customer, and nobody wants a nasty gram from the US government about something that has been bought from a US exporter and the payment has not been received. So they are definitely here to promote you as a US exporter, because that also promotes US jobs, it promotes US growth. And to be quite honest, so the high level term for XM is an ECA, which is an export credit agency, and every country pretty much has them, and their sole function is to support your whatever country they're in, their exports. So it is a wonderful tool. They also they can connect you with different insurers, so you can get the double risk mitigation, the loan of the guarantee of the US government, along with their preferred insurance companies and brokers that they work with. If you do decide to, maybe bundle some of your AR to borrow against it, they have really, I mean, it is a great program. So if you haven't looked into it, I would suggest doing a little bit of reading and finding out more. So yeah, what other questions? Oh, sorry about
Yeah,
that.
let's open it up to questions. At this moment, I'm looking at the chat box and I'm not seeing any questions. So if any of you have a question, feel free to unmute yourselves and ask your question.
Hi, Melissa, this is Eddie. I don't have a question, but I like several of your slides. At the beginning, also, you mentioned that a company should have a good relationship with a freight forwarder. This is very important. But also from my experience, I found out in addition to that, it's very important for a US exporter to have extra relationship with their own banker.
Mm-hmm.
And that banker should be involved in international trade, because the letter of credit department or documentary department, they get a lot of paperwork. If they don't know you, they don't give you the attention. So I made sure that I build relationship with the people who touch the paper of the letters of credit or the documentary collection. I visited them in person twice a year. And when they saw my paperwork, it was on top. So I always got paid. When discrepancies happen, they call me, Eddie, it's discrepant. I'm going to send for waiver. I want to send for approval and so forth. So it's very important, the freight forward plus a great relationship with the banker in the US.
Absolutely. And as a matter of fact, here's the reality is that the banks are the lifeblood of any business, but that only works if you have a relationship with your bankers. To Melissa's earlier comments about having your financials and other documentation, and what kind of risk is in your business, is it seasonal, on and on. The more information you can provide to your banker, the more comfortable they're going to feel, and they're going to be an advocate for you. But once again, that relationship only works if you're transparent and they know who you are, and they will go bat for you. I used to be a banker, and so I know how this works, and relationships is really important with your financial institution.
Exactly. Thank you. That was exactly all the right things, Eddie. And I'm going to sprinkle just a little bit of, if you are exporting somewhere new, I will go back to the agent will help you, because if you have an in-country agent or boots on the ground in that country, if you do have to put up like a bid bond or a performance bond as part of your contract, which is often the case, or if you get an advance payment, a lot of times, on your letter of credit, it'll be structured where you get 30% of the invoice price upon just a presentation of an invoice and a site draft. So, you know, that's something when you put up that advance payment, if you've got somebody in country, they're going to collect that local guarantee from whatever bank overseas is issuing it and take it to your buyer. I mean, they're working for you, they're going to get a percentage. So it is a trifecta. It's your freight forwarder, it's having an agent in country really helps, and then it is your lender or your source of financing. And that's going to be where you have your 3 keys to success and grow your business.
That's great. Any other thoughts or questions on the part of the audience out there? Everybody's being pretty quiet today.
I know.
Here is again, Melissa, this is Eddie. I love your slide when we were talking about from cash in advance, letter of credit to consignment. If I were to really weave one thread through all of that, what Trudy mentioned before about relationship, I'll weave trust. Because if somebody's going to give me cash in advance, I have to have first a relationship with that person and build a trust. No one is going to send me thousands of dollars from out of the country if they don't trust me as a seller, as a manufacturer, to fulfill on that transaction. Letters of credit. I have to trust that the bank is going to pay me and trust the process, that the letter will not be discrepant. If it's discrepant, that I have also to get paid, they can waive it and so forth. Every single one of them, from cash in advance to consignment, trust is key. It's built with relationships. So this is the two takeaway. Relationship plus trust gets you to the promised land and to be successful.
Very good, Eddie.
And back to the chat that Heidi is posting, you know, a letter of credit is a starting place for a lot of people because your buyer may need financing. I mean, that's part of it. You know, they may be going to their bank to open that letter of credit in your favor because they may be getting financing to buy the goods from you. So I definitely wouldn't steer away from it. I would definitely find a bank that has an established letter of credit or international department, because they're going to ask you to get a draft of the letter of credit before it's issued, so you can read out anything that you know you won't be able to comply with in advance. And before, you know, they issue it, you don't have to get amendments, like a formal amendment to change the terms, so you will be able to comply. So these are all the, you know, great resources that you do have available working with a bank, is they know how to help you look out for pitfalls.
You know, and Melissa, you just addressed something that I think maybe a lot of people don't know, and that is that not every bank has an international department that can help them with things like letters of credit. And so, you know, having a relationship with somebody, with a bank that is of the size that would have that kind of department is going to be really important in many cases. I would say, if not most cases, when you're dealing with a real small bank, it's highly unlikely that they have experts in international business and that they have the capacity to do letters of credit. So make sure that you're working with somebody that has that kind of capacity.
Exactly. And if you are not, a lot of times, you know, your bank might partner with a bank who does. And I have even seen it where a lot of times you can assign the proceeds of your export letter of credit to your financial institution. So maybe you get some financing on, you know, producing whatever you have sold. And if your bank will take it, you can assign the proceeds because they know that you are going to get paid under a letter of credit. So what you can do is it's just basically forms that you fill out, and, you know, you can say, when I get paid on my $1 million invoice, I'm assigning, you know, 70%, 80%, 90%, whatever your financing was, to the bank, and they can use that to lend against. So many different tools out there for you to use and to look into to see which one is right for you and your business.
Yeah, and I think you said something just now that's really important. Is these are all tools, and depending on what it is that you're trying to accomplish, one tool will be more ideal than others. But it's important to know, what each tool does, and to try to pick the correct one.
Exactly, because you might need different tools for different countries.
Oh, absolutely.
Yeah.
Well, I don't think that we have any more questions. So with that, we will close out today's session. Melissa, thank you so much. Miss Heidi, if you will put up the slide pertaining to, are we still doing the book thing? I think. Is that correct, Miss Heidi?
Yes, we are.
Okay, well, let's go ahead and do that.
Well, she pulls that up. I just want to say thanks everybody who joined today, and I hope that you got some good information and you have my contact if you need to talk more about anything you're working on.
Right, we're going to put up the slide at the very end, and while Miss Heidi spins the wheel.
All right. Yes, here we go. Oh, go.
Why is it so slow?
Hi. It's Eddie.
And Eddie did.
Okay.
Eddie got it this time. Well, that's great. Well, very good. Congratulations, Eddie.
Thank you.
If you will now, Ms. Heidi, go ahead and put up the last slide where it has everybody's contact information. Would really appreciate that.
Just one moment, please. Let's see here. There we
There
are.
you go. Very good. So there is Melissa's contact, mine, and Jonathan's as well. If you have questions of any or all of us, feel free to contact us, and we'll be happy to answer any questions that we can. And if for whatever reason we don't have the answer, I bet you we know who does, and we will put you in contact with them. And that is all for today. We will see you next week, which is the very last class having to do with legal and contractual issues. And we're going to have Mr. Graham Catlett, who's an international attorney, and he's been with the District Export Council now for many, many years, and has owned international companies and has helped international companies for a very long time. So he's going to be a wealth of information. And so I hope that you guys take the opportunity to attend next week's webinar, same place, same time.